been a busy week for policy makers in the country, I must tell you. Budget defense ahead of the year 2024 and the flurry of projections and steps ahead of the new year. 2023 is gradually winding down, and the World Bank says NNPCL is not transparent enough as Nigeria continues to battle high foreign exchange rates. Recent development in the economy show that cash still reigns supreme despite all efforts to go cashless. Deposit money banks are limiting the amount for withdrawals over the counter and at their various ATM terminals. But the Central Bank of Nigeria has been assuring Nigerians that it has the ability, the sector is secure to deliver, but then it is officially the holiday season. This edition will be dwelling on the cash policy and how it is defining you and I in the coming days. Also in the program is our complementary segment Simplified and Market Roundup. My name is Leah today, and you're welcome. Let's start the business of the day with a recap of major happenings in the economy in the course of the week. The December 2023 edition of the World Bank National Development Update NDU, turning the corner from reform and renewed hopes to results, has been released. The report recommends specific actions required to further sustain and achieve the full benefits of reforms already embarked on by the government. These include controlling inflation and improving the stability of the FX market, achieving fiscal consolidation and sustaining savings from the PMS subsidy reforms and improving non-oil revenues, as well as addressing structural barriers to growth.
Ultimately, what investors care about is that they will get a return on the investments that they're putting in, that the sanctity of contracts will be honored. And I think those are the areas where, there's been real movement over the last few years.
The system of waivers, tax incentives is going to be scrutinized with a view to revamping it and saving revenue and blocking leakages, particularly amongst the ministries, departments and agencies.
We're taking a very comprehensive look at all the different policies that have come out from the central bank over a period of time to see how we can harmonize them and come out with an elegant document that really states what is required from start to scratch.
The Minister of Finance and Coordinating Minister of the Economy, Mr. Aliyu Audu, says the federal government is making efforts to expand the impact of the National Vehicle Registration (VREG) through integration with each of the 36 state vehicle administration agencies to simplify compliance and regularization. Audu at a zonal sensitization seminar on VREG noted that since its emergence in 2021, the vehicle registry had recorded several benefits, including its utilization as a tool to mitigate the evasion of customs duty payments and drive operational efficiency in motor vehicle administration across state lines. Following concerns over the health of deposit money banks, the Central Bank of Nigeria (CBN) says the Nigerian banking industry remains resilient as key financial soundness indicators were within the regulatory threshold. The bank, in a statement by the Acting Director Corporate Communications, Hakama Sidi Ali, said the indicators were captured in its most recent economic report of 2023, and the CBN is engaging with various critical stakeholders to sustain the level of confidence in the Nigerian financial sector. The clarification, she stated, was necessitated by reports suggesting that some licensed commercial banks in the country had failed the CBN's capital adequacy ratio for international authorization. In another development, the CBN has suspended the charging of 2% and 3% processing fees previously charged on all cash deposits above the threshold of 500,000 naira for individual and 3 million naira for corporates with immediate effect. The bank, in a circular to all banks, other financial institutions, and non-bank financial institutions, said the suspension shall remain effective until April 30, 2024. A statement by Dr. Adetona Adedeji, Acting Director of Banking Supervision, instructed all financial institutions to accept all cash deposits from the public without any charge going forward. The Pension Transitional Arrangement Directorate (PTAD) says it has commenced an expanded computation project for verified pensioners and next of kin of deceased pensioners with a view to resolving their complaints of non-payments of gratuity and their benefits. The Executive Secretary of PTAD, Dr. Chioma Ejikeme, who made the disclosure, stated that the expanded project became necessary following a deluge of complaints from some pensioners and next of kin (NOK) of deceased pensioners over non-payments of the gratuity and the benefits many years after verification. Dr. Ejikeme explained that the delay in NOK payments was as a result of the thorough and painstaking scrutiny NOK documents are subjected to in order to avoid errors. A statement signed by the head corporate communications of PTAD, Olugbengaja, he noted that the expanded project will check and categorize all verified NOK files and claims of non-payments of gratuity with the aim of identifying and paying all eligible NOK and pensioners with unpaid gratuity. He advised concerned beneficiaries to seek clarification from the Directorate. Amid the biggest surge in global interest rates in 4 decades, developing countries spent a record $443.5 billion to service their external public and publicly guaranteed debts in 2022. The World Bank, in its latest international debt report, showed that the increase in costs shifted scarce resources away from critical needs such as health, education, and the environment. The latest international debt report marks the publication's 50th anniversary and notes that either eligible countries have spent the last decade adding to their debt at a pace that exceeds their economic growth, a red flag for their prospects in the coming years. What can be done to address the current cash crunch and to encourage deposits into money banks? We sought answers to the question, and here's that conversation. Aliyu Audu is the Vice President, Nigeria Irish Business Association, and together we shall be looking at the cash scarcity issue that is affecting a lot of customers of deposit money banks and its attendant consequences. Thank you for having me in your office space.
Thank you very much.
Should we be talking absence of cash? This is 2023, and how did we get here in the first place?
I don't think this is where we should be at this stage of our economy, especially, given our history. We have worked very hard to develop the banking industry, but I believe this is not where we should be at all. But I believe this is an offshoot of the last administration, because if you remember correctly, last year there was restriction on cash, and a lot of people could not get their cash, which should not be the case. And as such, you heard there was chaos and calamity in banks. People go to banks and they can't get their money. You hear of people burning themselves, people dying. So this is obviously not the place we should be, because we have worked very hard in the banking industry to get to where we are. I myself was a banker for 15 years. So this is not where we should be.
What exactly would you say is fueling this cash scarcity? I mean, we had this issue last year, yes, with the Naira redesign policy, and then we are having it again this year with no redesign policy at all.
First of all, I will not compare this to what happened last year. Last year was practically impossible. You couldn't get cash at all. But this year, there is scarcity, but not as serious as last year. The CBN has come out to tell us that the scarcity is caused by money deposit banks, meaning banks are going to withdraw large chunks of money to their customers, for their customers. So this is a result, according to the CBN, of the scarcity. Now, all restrictions on withdrawing money has been lifted by CBN. You remember that last year, for you to withdraw anything above 3 million, you pay a surcharge. Was a practice last year.
called it processing fee.
Yeah, processing fee to the bank. So individuals could not withdraw above a certain amount, which is possibly, I think it was at some stage was 300,000 or 500,000. The amount varies. I can only speculate is a speculative demand for money. You see, there are three reasons why people demand money. And one of them is speculation. When you are speculating that, oh, I better take out my money from the banking system so that tomorrow I don't have to pay any surcharge. Or I better take my money from the banking system because of what happened last year. That is the only explanation I can give right now.
What exactly is your opinion about this removal of restrictions on cash deposits? 2% for individual account holders and 3% for corporate account holders who are depositing cash between 500,000 and 3 million.
What the central bank is trying to is to encourage people to come and deposit their money in the banks rather than hoarding it under their beds, in their houses, because people tell themselves, well, if I keep my money under my bed or in my house, I don't have to pay any processing fee. So this policy that the central bank is introducing is to encourage people to bring money into the banking system. Because we are now crying, the banking system is losing a lot of money. And people, the scarcity of money, people can't have access to their money. You go to the bank, you want to withdraw, they tell you, sorry, you can't withdraw. So it is the function of the central bank to address this scarcity so that market men and women, businessmen, can bring in their money into the banking system without being scared of any charges.
Governor Aliyu Audu of the central bank recently unveiled his policy direction for the central bank, and he talked about ensuring that the bank returns to its original mandate, and one of those is a price stability. Do you see these recent actions by the central bank actually entrenching stability in our banks?
If there's too much money in the economy, that means everybody has money. People now use that to go and buy goods and services, meaning the price of goods and services will go up. So the central bank will now step in and say, no, let's restrict the supply of money. Let's not let people have money. And one of the ways they do that is by increasing interest rates so that people cannot have access to credit facilities. One, and also by restricting the amount of money in supply.
So it seems you're aligning with the IMF saying that the central bank should increase rates.
Well, it's a very delicate situation right now because I know Nigerians are going through a lot. And rates are high. We have one of the highest rates in the world. Yes, if you take a loan now, you pay between 20 to 30%. That's a very huge amount. So it's a very delicate situation. If you increase rate, you make it more difficult for the ordinary Nigerians. So I might not necessarily, because I'm a Nigerian and I feel it. I don't think IMF is here. So I won't encourage increment in interest rate at this stage because Nigerians are going through a lot. There's scarcity of money. If there's scarcity of money, people don't have money, businesses are looking for money. Why do you want to increase rates? You make it more difficult for people to have money. You strangulate people. So I'm not sure I align with that policy of increment in rate at this stage of our economic life. I don't agree with that. Rather, we should look for measures that we can encourage people to enter into the financial system. If you go to foreign countries, the rates are 5%. If you want to borrow money, you pay 5%. It makes business easier for people to do. Now, a lot of people want to leave the country because the cost of doing business is very high. We don't have constant power. You have to spend money on power. We don't have constant electricity. Cost of diesel is high. If you make interest rates high, petrol has just, the price of petrol has gone high. You are going to strangulate Nigerians. You are going to strangulate the economy. So I do not think, I think the CBN should soft pedal, leave interest rate the way they are, and look for other means of jump-starting the economy. Soft loans to businessmen, agricultural loan, solid mineral loans, mining loans, different types of credit schemes that support various sectors of the economy to increase production. That's what we should be looking at. We need to increase production. We are a consuming economy. We don't produce much. We import milk, we import sugar, we import fish. We have, as of the last time I count, we have a food import bill of over $5 billion. That's why the demand for dollars is high. If we start looking inwards, producing what we eat, then we will start helping ourselves, making the economy better.
But the World Bank, if I may come in here, the World Bank, the National Development, the report they released, says that it was good that we removed restrictions on imports that was going to encourage competition.
Now, you should know that that is the view of the World Bank. The World Bank, as the name says, is World Bank, tries to play fair amongst 190 something countries we have in this world. They're not looking at Nigeria. If you look at China and US, they have a trade war. China puts embargo on goods coming from US does the same to China. In protection of infant industries, we are not ripe yet. We are not at that stage yet. It's important. China did that, and that's why China has been able to grow its industries, because the other industries from other countries are established. In the case of rice, for example, we cannot compete with Thailand rice. You have to stop the importation in order and support local industries to sell their rice, perfect their production, and then after a while, they can now they can now compete. But we are not at the stage to compete yet. We should not be looking at removing import restriction. Why is America putting import restriction on Chinese goods? Why is Chinese good putting import restriction on American goods? There's what they call dumping, which is what is happening in the textile industry. The Chinese came with textiles and took it to a place called Wapa in Kano and gave it to them at free interest. Take these goods, sell and pay me later. You know what happened? We had 110 textile industries in Nigeria. They crashed. We only have about 10 now. The school uniform our children wear to school is made in China. Why is that? By doing that, they made foreign-made textiles cheaper than locally made textiles. And you know Nigerians, nobody is going to pay more for something that is not as good as something that is foreign. And that is where we found ourselves. Over 100 textile companies were thrown out of production. Loss of jobs. Nigerians are affected. A classical case of dumping. So we need to get the customs to be more active. The customs should be active. They should stop letting goods from smugglers coming to Nigeria. There has to be an import quota if we are to protect local industries. That's just the truth. If we listen to IMF, we are going to start importing anything we eat. Even toothpick, we import toothpick. So we have to look inward. We have to protect made in Nigerian goods. We have to protect local industries by restricting other countries that are established and doing very well, bringing their goods to compete with our local goods. That will make, there's no way they can compete. So we need a gestation period. And that period, we need to put import duty. We cannot listen to IMF if we want to protect Nigerian industries. China is not doing that. America, the great America, is not doing that. So who is Nigeria to do that?
You're talking about protecting industries now, but the banking industry is faced by activities of men of the underworld parading, will I say, within the cyberspace and scamming depositors of their resources. And then the banks will in turn tell those people when they complain that there was nothing they could do about it. What would be your take on that?
You should not let people that are legitimately scammed, you should not let your customers go away like that. You should offer some form of insurance because it wasn't their fault. And it is it's different if, maybe you left your ATM card carelessly, you left your PIN, your banking information, your checkbook, you left it carelessly. If that is the case, then you have to be responsible for it. But if that's not the case, that maybe for some reason they penetrated and got into your account, then the bank should be held responsible. And the bank should provide insurance against hackers and hacking to their customers. It is the duty of the banks. Customers should not suffer for something they are not aware of. Not a lot of people are computer savvy or technology savvy. Majority of Nigerians are not. I'm not. So why should I suffer for something I don't know anything about? So the bank should spend more and provide that extra layer of security and should be able to investigate whether it was the customer that left his or her details carelessly or whether it was a scammer that went up in the air in the internet and was able to extract money from the customer's account. So the bank should know the difference and they should be held liable. And they should provide insurance against hackers to their customers.
Well, sincerely, thank you for giving me this opportunity.
Thank you very much. You're welcome.
Thank you. Have a nice one.
You too.
My name is Audu Mekori.
Keep watching The Policy with Leah.
It aims to provide policymakers an opportunity to explain their policies in a way that members of the public affected by those policies can understand and engage with those policies.
Keep watching The Policy with Leah.
The Policy with Leah quite certainly is a show to turn to when it comes to policymakers' desire to monitor and respond to challenges within the capital markets ecosystem and the economy in general. I am Sterling Ellis, a duly qualified capital markets professional in Nigeria, in the United Kingdom, and in the United States of America. Enjoy The Policy with Leah.
We've come to the Do You Know part of the program, and of course we learn every day. Our word for today is obligo, and from there we go to the markets. For more on market rates, do well to log on to our sister website www.marketnigeriatv.com. We have all the rates for you there, and we seek your partnership on that segment as well. We come to the end of this episode, but you can subscribe to our channel if you have not done so. We have all previous episodes there for you on YouTube. Also, communicate with us via our social media platforms. We value your feedback. You bring your comments, your questions, and suggestions. See you again next week, same time, same channel. My name is Leah today. Have a beautiful weekend ahead, and God bless Nigeria.